Attending the Asian Financial Forum 2012 here in Hong Kong is the first Deputy Managing Director of the International Monetary Fund, David Lipton. And he joins us now from Washington, D.C., the IMF's headquarters. David, could I start really by looking at the Eurozone crisis? And is that really the biggest concern facing international economics at the moment?
You know, we are looking very intently at the Eurozone crisis. Clearly, the world economy is in a dangerous new phase. And we are seeing concerns around the world about the combination of government debt, banking sector problems. That's something that is particularly an issue in Europe and of concern to markets around the world. So we are very much focused on that. We're working with European countries who have particular problems. We've been supporting a number of them. We're working more generally with the countries in Europe to address the difficulties that they have. We're also very concerned about the implications of what's going on in Europe for countries around the world. There have already been some spillovers from the situation in Europe, and there's the possibility, say, also in Asia, which has had very strong economic growth, that they will be affected.
The IMF's outlook for 2012 back in September looked at huge variations between the Eurozone, for example, the United States and China at 9%. But what's the outlook as of now, would you say?
And we're still putting together our next World Economic Outlook forecast. I think most forecasters are putting global growth in the 3.5 to 4 range for 2012. But as you've pointed out, that masks a very substantial variety of prospective outcomes around the world, with a very rapid growth in a number of emerging market countries, modest growth in the United States from its historical perspective, but higher growth than what we are expecting in Europe. So it's made up of a variety of different contributions. So I would say that it's very likely that the world economy will grow at a reasonable level, but with quite a lot of differences around the world.
And looking at China, would you see 9% GDP growth? Or would you see a hard landing as asset prices begin to drop, as some people say?
I don't see China having a hard landing. I know some people have raised that possibility. What most people believe, and I think what we subscribe to, is that China's growth is moderating somewhat from the very rapid rate that they experienced last year as a result of two very understandable factors. They've taken some steps themselves to slow the economy, to keep inflation under control, and to keep credit growth and property price developments under control. So that's one factor. They also, of course, an export power. With the growth in the advanced economies slowing, that too has affected them. But we see this as a smooth moderation to some slightly lower level of growth, but the continuation of what by global standards would be considered a very rapid growth.
The IMF talked of inflation and of rising prices in places like Singapore and Hong Kong. But would you see that quite differently today with the cooling economic landscape?
I think you're right that the cooling global landscape is changing the picture somewhat. In Hong Kong, the asset price and property price situation has crested. One is likely to see a moderation of growth and a fairly stable environment as far as asset prices and property prices are concerned. Hong Kong should probably now be a bit concerned in the year ahead about downside risks. Of course, we don't know which, if any, of these downside risks will materialize. It is a factor that should be a concern to Hong Kong, mainly whether or not there'll be spillovers, both financial sector spillovers and trade spillovers could affect Hong Kong, just as they may affect other countries in the Asian region.
So would you focus on any particular risk for Hong Kong then?
Well, I think Hong Kong, with its dual focus on trade and finance, really has to consider both the risk that banking sector and financial sector problems emanating from Europe affect some of the institutions that operate there, affect some of the financial markets, and also have some concern about a slowing tenor of trade growth in the world in the coming year.
Of course, the renminbi, the Chinese currency, has been traded internationally from Hong Kong. But would you see it from the IMF's point of view that the RMB joins international currencies in the special drawing rights of the IMF?
Well, we are engaged in a study ourselves as part of our work program, as well as we have been working with the G20 that's focusing on this question of What should the SDR basket look like in the future? And I know China has been trying to broaden the use of the RMB and its usage internationally. I don't think there's really a prospect of the RMB entering into the SDR basket anytime soon, because one of the criteria that's quite clear in the way in which our articles are written is that the RMB has to be a freely usable currency, which means in our parlance that it has to be very widely used in both trade and financial market transactions. But it certainly is something that would be very useful for China to increase the utility of the RMB. I think that's something that would benefit China and surely something that would benefit Hong Kong. So, it's something we certainly support, but we see it as a part of a process that's probably going to take a long period of time.
You're attending the Asian Financial Forum here in Hong Kong, where the theme is Asia driving sustainable growth. But is that growth sustainable over the medium term?
I think that Asia is the most dynamic part of the global economy, and there's no question that Asia can play a major role in driving the global economy. I think it is a time where Asia has a few concerns that probably should be tended to. Asia needs to rebalance growth, since this is a time where the United States and Europe, some other parts of the world, will be growing less rapidly. Asian countries can't rely quite as much as they have on export demand driving their economies. And so some rebalancing of economies to strengthen domestic demand I think is key to Asia maintaining its dynamism and vibrancy.